Hey, hello everyone, and welcome to my channel once again. So today is going to be an amazing day, and I have been off for a while, though, but I'm back, and it's going to be an amazing time. Welcome to my channel, and if you're serious about learning trading the right way, well, you're in the right place, and I am honest to God's time treasury. Well, popularly called GT, so I guess GT will be fine for me. And in this module one, which is trading foundation and market overview, this most important lesson, this single most important lesson you are going to be watching before risking. So know that everything I'm going to be doing here are strictly guided with the rules of YouTube. So you don't I don't go against any of the rules and policies of YouTube. So let's quickly continue. So the first session I'm going to be looking at, which is the session one of this course outline, is going to be the goals and what this lesson is going to be delivering to you. Now, quick promise, after this lesson you will be able to sorry, I'm trying to arrange words in my head. So after this lesson, you will be able to open a trading platform, not just opening a trading platform, understanding what you are seeing on the charts. Though this course is not basically focused on technical analysis, but some of those highlights are going to be dropped and touched. So we're going to be placing demo trade. We're going to be opening a broker. We're going to be using a Meta 5 application for that and other thing. And in plain English, we're going to be understanding how price moves and why liquidity matter. And that's the foundation every professional trader builds on. No flaws, no hype, and straight to work. So let's get straight into the session 2 of this exact course, which is going to be the session 2 of this course, which is going to be what is trading, and that is one of the most important of this video, knowing what trading is. Okay, so what is trading? Now, think of trading as the normal word trading, which you know it to be. Now, what is trading? Trading is simply the art of you buying and selling assets to take advantage of price movement. And that may sound simple, trust me, because it is just basically buying and selling, right? Now, but in trading Forex, as we are talking, or we are basically focused on, it's where it get complex is why price moves or who is moving the market. That is where trading tends to get sorry about this, let me remove this from the screen. So okay, so where it tends to get complex is why price moves or who is moving it. Now there are four major markets we'll focus on in this our course. Is Forex, indices, commodity, and crypto. When you say Forex pairs, you're talking of currency pairs like Euro USD, GBP USD, currency pair meaning another country and their currency paying with another country and this currency. And this is the largest and the most liquid market on the earth, which is liquidity moves fast here. When you say liquidity, meaning the movement of prices, how fast, how volatile it is. So the next one is indices, like I said, which is baskets of stock like the S&P 500, Nasdaq, US. You have US 30, you have US 100, which is also known as the Nasdaq. Now, these ones are also indices. They are pairs we can trade, but they represent an entire economy on move on macro sentiment. Think of Forex to be like trading two different countries, and indices to be trading a particular country or an particular economy like a full region, like trading US 30 companies in US. That's what US 30 mean. US 100 companies in US, stuff and other stuff like that. Then the next set is commodities. These are rare findings that the society has, like gold, the nation has or needs, like gold, oil, and others, and these are often used as safe haven or leverage play in inflation and supply stocks. So I'm going to be explaining that word leverage. We're going to be having some places that tends to explain all of this. So now what you want to know next is their crypto. Yeah, we may know crypto. If you're not familiar with crypto, well, stick with this video because I'm going to be doing a lot. So this is just model one, so you have to follow along, don't miss out on this course outline. Now crypto like Bitcoin, you must have heard of Bitcoin, definitely. Altcoin are other coins apart from crypto like Ethereum, Litecoin, Shiba Inu, and many others. So this is also highly volatile, trust me. It is liquidity driven and increasing correlation to macro flow. So now let's go on to the next aspect, which is why liquidity-based markets matters in ICT. Why does liquidity-based markets matters in ICT? Now, here's a conceptual leap, meaning something you should think about or you should know that separates retail traders from institutional traders. And if I'm going to say this so commercial, is what separates retail noise from institutional thinking. So now markets are driven by liquidity. Institution like bank, hedge funds, market makers do not buy or sell randomly. They don't buy or sell randomly. They need liquidity. They create and chase liquidity also. Know this. Now, retail traders, I will explain what liquidity is in time due. Now, retail traders will look at visual pattern, like what the market has been doing before, because there's this quote that says that the market tends to repeat its trend or tends to repeat pattern that has occurred before. So if you say retail trader, we look at visual patterns like double top, head and shoulder pattern, and ICT traders we interpret those same pattern as liquidity setup. That's what we call them, liquidity setup. Now where stop are posed and where institutional are likely to execute their order. Now look at this from this aspect. It's going to be telling us that ICT traders, because we're going to be understanding and learning as an ICT student. So even though you're going to be using other things apart from ICT, but I am going to be focused and based on ICT because that is what my trading will be entirely focused and driven on. Is that, take for an instance now, I don't want this course to be too ambiguous or large or too big. I will go straight to the point, but I want you to watch this course and you collect something from it. Meaning you will not go out and say, I want another course that will explain everything that is being said here. No course will be able to do it like I've done it, because this is the updated one for the year 2025. So if you're watching even in another year, it doesn't mean it's going to be updated. Just telling you that this year 2025, any other course out there would be as this course will be as good as those courses out there, because I believe what God can do and how influential this can get. So now retail traders, we look at patterns like I've said, and as an ICT trader, we are looking at where is the market most likely to draw to because of stop losses. So we're going to be understanding those words. Where stop loss, meaning where people have put their stop, that they don't want to lose lose more when it gets to this place, close me out of the trade. That is stop loss. So we're going to be understanding this concept. So watch the first video. You're going to get those concepts. So now the next thing is that we are looking for where the market is most likely to draw to, which is to pull and take stop loss. Because let me tell you something, I don't know what anybody has told you that the market sometimes is buying, the market is selling. See, the market is always moving. Now know this, the market is always moving to take stop loss. That is only why the market is moving. For me, telling you 100 facts that this market is moving because it must always find stop loss. It's only looking for stop loss. So when you are trading now, I believe in this mindset, this certain mindset, being on the side, or maybe trading after the stop has been taken. That's what liquidity ICT trader does. We trade after stop has been taken, or when stop has to be taken, or towards where stop will be taken. I'm believing I'm not too fast. If I'm too fast, do well to watch the video and jot down. You will need it. I don't know, I see no reason why you're watching my video and you're not jotting down. Then you're not learning, because our brain tends to forget 40% of what we read. Like after a week, I guess. It's a week, but we tend to forget. So don't just watch my video and you are not jotting down and you are no, that's an error. You don't do that here. Come on, get yourself engaged and start writing, jot down, because it's going to be a course. Just like when you have an education for school, this is an education, so let's get going. I believe I've talked so much about that exact aspect. So now let's continue with this, that take for instance now example, a double top might be a retail seller celebrating a top, but above those highs, stop orders and buy liquidity were taken. We are taking those surplus was taken there. So now let's go at the core basic. What are these core basics that we must know about forex trading? The very first thing I'm going to be talking about are the core mechanics of building blocks, which is the pips, the lots, leverages, spread, margin, and margin call. And I will explain each and show a live visual on MT5 so you can see how it affects retrades. So now the first thing I'll be looking at is pips. Now what are pips? Now pips is the smallest standardized move in a currency pair. Notice that is the smallest move that can occur in a market. Like I'll be dropping an example right here, which is Euro USD, which moves from 1.1000 to 1.1001 to which is equal to a 1 pip move. Now for most USD quotes pair, one standard lot is for most notice for most USD quoted pairs, one lot is 100,000 units, and it's equal to roughly around $10 per pip, meaning for every 1 pip is moving, it's giving is a profit of $10. But we're not going to be, most of them are not going to be using those type. So now most of them can be we have the first one, which is the standard lot. We have the standard lot, the macro lot, and the micro lot. So one lot equals 100,000 units, which is a standard lot. 0.1 is the macro lot, which is for the macro lot 0.1, which is 10,000 units, and 0.01, which is the micro lot, is for the 1,000 units. So now let's go on to the next, which is lots. What are lots? So lots are basically contract size. So we have, like I said, we have standard lots, we have mini lots, we have macro lots. And when you develop your risking size, start with micro and scale up as it benefits you, or maybe you are growing as a trader. So now we want to understand something, saying what are leverages? I said something about leverage in the video. Now leverage is simply borrowing capacity, meaning the ability to have a $1,000 account, but your leverage is 1:100, and you're able to trade up to 100,000 of notional trading. Meaning, even if you're having a 1,000 account dollar, on the normal, our account size does not permit us to trade. Like, it doesn't permit us, but because of the leverage your company or your broker you are using gives you, you have the ability to do this wonderful thing, which is you can trade with a $1,000 account, a $10 account, a $5 account safe, and you can make profit from it when you know what you're doing. Because trading with a $5 account and you don't have an insight of what you're doing, get your account blown, like blowing the account. When you hear the word blow account, simply means you lost the money involved in trading. And I've blown quite a number of accounts, so I can tell you blowing account is very easy than going this account. So now next we're going to be looking at is spread and costs. So what are spreads in the market? Now the spread is basically the difference between the buy and sell, or the bid and ask. So when you say bid and ask, it's the same thing as saying buy and sell. So that's your first cost. Now brokers may also charge commission on top of that, and understand that when you are trading, you treat it like a business, and you are going to track your cost per trade and also include your edge of trading in your calculation. So now let's go on to the next aspect, which is going to be our margin and margin call. So what's a margin? Now margin is basically margin. Now listen to this please. Margin and margin call is what we're looking at. Now margin is the collateral required to hold leveraging position. Now a margin, now look at the aspect where we say a margin call happens. Now there's a difference between margin and margin call. Now a margin call happens when your equity drops to the broker's required level in terms of over leveraging or losing trade or margin danger. Now notice that in plain text, this is what we're saying here. When you over leverage, meaning you are using high leverage, you're having a $10 account but you are trading with 1 ratio unlimited, meaning you can you can use any lots. Now your losses, your over trading or your over leveraging plus your losing trade is going to equal to your margin call if you are going to be called out of the trade, meaning they are going to close your account, or maybe you get your account, the every money inside is wiped to zero. Most of the time they leave cent for you depending on the lot you use and other stuff like that. So keep margin at usage conservative, and I recommend that you keep usable margin like 50%. Don't risk over 1% of your account, depending on your account size though. Like if I'm having a $10 account, most of the times I risk $2 or $1, which is not really 1% of the account, because my account size cannot permit me to use 1% of $10. You know how much that is. But if I'm using a $10,000 account, I can use 1% to trade and stuff like that. So now let's go on to a simple risk example. So now notice that an account size of like $1,000. Now let's say I'm going to be using a lot of 0.1 lot, which is $1 per pip. 0.1 lot, $1 per pip. We know that to be mini lots. Then we have the macro. Yes, I guess I missed that before. So now if price moves 50 pips, now how do you know how much profit you're going to make? Now this is what you're going to do here. It's just basically if price moves 50 pips against you, it's going to be a loss of $50, 5% of your account. Now imagine how small that is. That's reasonable, that you can afford to lose from a $1,000 account. Just if I'm in Nigeria now, let's say you have an account of 100,000 naira and you lose 100,000 naira and you lose 1,000 or 10,000. But losing 10,000 is not advisable. You know why? Because it simply means that you have 10 lives. Because when you lose $10,000, 10,000 naira 10 times, you're going to be having nothing in your account. But imagine you are losing 1,000 every day. Let's say you are risking 1,000 naira every day from 100,000 naira. You need to lose, meaning you have to lose 100 times to lose your account. And losing 100 times, I've not seen it happen. I don't know if it's going to ever happen. Well, if you follow this course, never, even having 10 lose streak, that's not going to be a deal. I'm telling you, because I know that you can never, by God's grace, the God I serve will never let any of my students have 10 losing streak. No, you're not going to do that, as long as you follow everything that I'm going to be telling you here. Because I'm going to be using my life as an experience, which I have lost. I have made a lot of losses and other stuff like that. But I don't want you to repeat same mistakes I've made. That's why I'm making this video with 100% and sincerity of my heart. That was everything I'm telling you here. Take it like you Jesus Christ is going to be telling you something. So let's go on to what are the types of traders we have. So now the types of trader we have there are different types of traders. Like the first category, which is the scalper. Our execution time frame is basically 1 minute to 5 minutes time frame. And when you talk of intraday traders, we trade between within the trading day, no overnight trade, and we basically are looking for the kill zone, ICT kill zone. Now there are swing traders, which hold for days and they profit larger structural move. Then for position traders, we have they all trade for weeks to months, and those are the types of traders we have. And ICT setup are generally best suited for intraday and swing traders, because smart money footprint shows a multiple time frame and chooses the type that matches your schedule. Like say for example you're working a 9 to 5 job, or an 8 to 6 job. You will not be having time those time, especially if you are working like a sales rep or anything. But there are other sessions that you can trade, and we're going to be looking at those kind of sessions. Now let's move on to the next part, which is market participants. Now who are those people involved in participating in the market? So those people, we have the retail traders, we have the institutional traders, we have the liquidity provider, which are the market makers, liquidity provider. Like those are the people that cashes your stop loss. They have the ability to swing the market down to a place where they want to take in their trade, and they take their trade from that exact place. And like those people are just the main man of this market. So let's just go on and continue. Now, if you understand that institution needs liquidity, institution wants liquidity, is taking out stop loss. Now, if you understand that the institution wants to take stop loss or wants liquidity to enter and exit their own position, you stop trading like a crowd and start trading around only where liquidity sweeps or sits. So now I'll be talking about the next part, which is brokers. And brokers, we have the ECN versus the market maker. Yeah. So now pick a broker you can pick yeah, there are brokers you can pick, but I'm going to tell you one I'll be using. It matters with two common type. We have ECN brokers. Now what are ECN brokers? Which is electronic communication network. Now this connects orders to liquidity provider, and the pros of it is that it is usually tight, has a tight spread, more transparent price, and the cons of it is that commission fees are basically applied to this trading. Now the next aspect is market makers, which is the other broker we have. A market maker, the broker may take the other side of your trade, and the broker may take the other side of your trade, trust me, for the market maker, and basically don't use that one. So the pros is that often easier onboarding and smaller minimum. Now for cons, it has a partial conflict of interest, wider spread during thin markets. Now recommendation for my students aiming for a foreign account, we use the ECN style broker or brokers that are known to be prop firm friendly. We'll be knowing or understanding what a prop firm is as time. You can also do your research on some words I say will be understanding. When you write them down, you underline. So now example of the brokers are going to be using here, we have like IC Markets. Those are brokers. IC Markets, Pepstone and Pepperstone. We have 8cap. Now only include broker name if I'm going to be only if they are good. Like another broker I can tell you of very good is SNES. That's one I'm going to be using in my next video. So now let's look at something very quickly. Is the trading platform I'm going to be using is the MetaTrader 5. And what's a trading platform? That can also be a question. Now a trading platform simply is a platform that enables you to take your trade, like the word says, a trading platform, and it is basically used hand in hand. I use MetaTrader 5 as a trading platform, and for my charting and tools, which is the next session, I use TradingView. And this is where you practice marks up, use bar replay and test setup and every other kind of thing. But MetaTrader 5, which is also called MT5, or Meta 5, we call it different name. We call it MT5, Meta 5, MetaTrader 5, or I'm using Trader 5 or Platform 5 and stuff like that. So it is where you execute and manage your live trades, and you just want to know a recommended workflow is that you analyze on TradingView. This is how I do mine. Analyzing on TradingView, I confirm on my higher time frame for the buyers. Buyer simply means where the market is going to go to, if it's going to go buying or selling, or it's going to be bidding or asking. And the others is I execute on the MT5 demo account, and as planned for this course, because we're going to be using the demo account, we're going to grow it side by side, and I journal immediately and take screenshots and also some notes. So the homework for this exact one is we're going to be installing Meta 5 or MT5 on your desktop or mobile, and TradingView is a web for your desktop, while if you're using a laptop also it's also for your web. And for your mobile phone, you download your MetaTrader 5 and TradingView. Those are the applications we'll be using. I'll be opening a demo account on the video. I can show you how to open a demo account on the next video. And also, what other thing will I be doing again? And okay, any broker. Okay, I'm going to be using. That's exactly what I'll be doing. Then the next thing is we're going to be placing demo trades, and that will be on another video. I'll be showing you the next video I'll be posting are going to be very powerful. Please do it to stick and watch them. Now if you have taken your first steps towards understanding market foundation and get them right, and the rest of the course becomes simple. You know why? You have gone through the basic, and this is the basics. So on my next course, I'm going to be telling you what I'm going to be doing, which is I'll be creating a video on how to use, like, everything you need to know about which is the core. Let me not say everything. The core things you need to know about the MT5 and the TradingView. I'll create both and 4 videos. One for mobile, one will be for mobile, one will be for mobile for MetaTrader, and another mobile for your TradingView, mobile for your laptop, mobile for your MetaTrader for both. You understand what I mean? Sorry. So just do this one and install the application and get ready to learn. And do well to like and subscribe, please, so because this will help the video and tell me that I'm basically teaching and there are people who are basically following. And drop a comment, tell me how helpful this was. If you like it, what are the things you noticed though? Am I too fast? Am I too slow? Am I not hitting points? Am I being ambiguous, or am I saying words that are too big and I need to come down to a level where everybody understand? Because I want my course to be the very best, that when anybody comes into watching my video, they don't just see anything but see value only. So have a nice day, and do well to subscribe to my channel, because this will basically help me a lot to keep on posting videos for you, and it increases my reach. So have a nice day, and until I come your way again, I am on this through God's time treasury. So do well to, you know, go and jot down and rewatch my video again, so that you don't forget and you get it. So have a nice day and peace out.